Hi guys, Harry Yotis here, professional trader for 20 years. Started my career way back in 2005 and still alive in 2026. Okay, so today I thought I'd make a video um, going over one of my losing trades, okay? We're traders, we always make mistakes, and we should analyze what we did wrong so that we can never do it again. Although we are, as traders, emotional creatures, and of course, it is a constant battle every day in the markets between fear and greed, and between, I would say, for a trader, ego and humility. Okay, so basically, you guys know that if you've been following me, that I am bearish oil. Okay, and I was bearish oil for good fundamental reasons. As you can see, the chart here is very, very negative. We have the technicals are very, very negative. And it looks here that it was going to test support in the $55 a barrel level. It's tough to see with all this stuff here, but basically the fundamentals were very bearish. There was huge production, a lot of oil in the market, and just a very bearish situation in the oil market. Okay, so I decided to initiate an oil short. Okay, and this is the oil short mistakes in summary. I will go over them one by one, but let's go after the timeline first, okay? If you guys can see here, I'll make it as big as I can. This red arrow here denotes the initial position that I took of a short, okay? This is when Maduro was captured for Venezuela. This candle, small candle right here, Monday the 5th, he was captured over the weekend on the 3rd. So Monday the 5th, the oil market opened slightly up and I decided to initiate a short. So for the next 2 days, you can see oil went down. And my expectation after this was because Venezuela was taken over, that, the world would be awash in Venezuelan oil eventually, and it would add to the glut, add to the bad fundamentals. So this stock was going my way. This is the US oil. The stock was going my way for 2 days because I was expecting it to break this huge support level and go all the way down, maybe to the $50 level, to 45. As you can see here, it can go all the way down to 42. This right here, the next support zone. And I thought that's what was going to happen, and quickly. Okay. And if you see here, when I got short, 2 days, 1 or 2 days, it was validating my thesis. And then boom, on the Friday, January 9th, it started ripping. Okay. It started going up. And I'm like, this doesn't feel right. We should have seen a break already. It's been 2-3 days since his capture. The world should have already discounted the information. We should have gone down. Okay. So what I did was I was wrong. The price action proved that I was wrong PA, and I covered half my position here. But I let the other half ride because we were still in a glut, if you will, in a too much production for oil. The world was awash in oil, and I still thought that maybe we could rebound, maybe go, I don't know, between $58 a barrel to 64, and then roll over again. So I was still bearish because, the Iran war hadn't happened there. We're talking January 9th, okay? Nothing was happening, okay? The fundamentals were bearish, okay? But slowly, as it came up, it started testing the 65 level, which is the huge support, a resistance from a while back, okay? This is why these lines were drawn. I'm not going to go back to the chart, but you'll see that trust me, that this 65.84-ish level was a very tough resistance level to break, okay? I didn't do anything. I still kept my half position. I was wrong. I just thought it would hit this level and go back down. I didn't want to add. But then I got I was losing money, okay? The first mistake was I didn't trust my initial instincts here and get out completely. I just got out for half, okay? The second mistake is coming up around here, which is I used only the technicals to decide the entry, ignoring the new fundamentals that were coming up. So yes, the fundamentals are still bad for oil, but coming into February 23rd, 24th, this week right here, there was a lot of, the U.S. was moving its aircraft carriers closer and closer to Iran, talking very tough that they were going to attack. So the picture changed. Like if Iran was going to get attacked, it's a big deal, And I ignored that. I ignored the changing fundamentals because if you close the Straits of Hormuz, the price of oil is going to skyrocket. Okay, but I thought it was just saber rattling. Nothing would happen. Okay, so I decided to initiate another short at this level simply because it hit a technical level. I completely ignored the fundamentals changing, and I just went for the technicals. Listen, It's like you should never make a decision based only on the technicals. You should have a fundamental backdrop, and the fundamental backdrop was changing. So worst case scenario, even when I'm wrong on half a position, I should not have taken a new short here, as the U.S. was putting its warships closer and closer to Iran and really trying to start a war. Okay, but I did, because I just looked at the technicals. It hit a resistance level. If you go to the RSI here, was already at overbought or close to it, and I'm thinking it never went to that level before. So I was just using technicals to re-enter the short. Okay, so now I have a full short because I have half a position from before, half a position now. But once the war was announced and we had a real breakthrough above this, I covered this short. Okay, so I took a loss on this short. Okay, but I was stubborn. I didn't get rid of both, just half. Okay, and as the war kept, and this happened in Monday, March the 2nd. Okay, over the weekend Trump attacked. So literally, I was in this second trade for like 2-3 days before I was wrong. I got out, but I didn't get out of the rest. Why? It's just ego based. Like I didn't want to admit I was wrong. The fundamentals are still bad. Like I was. This is what I was telling myself. The fundamentals are still bad, and they are. Like there's still a lot of oil out there. Okay, the only problem is that in the Iran war right now, the Strait of Hormuz will be closed, which means that it's not a question of whether there is or whether there is not a lot of oil out there. It's that oil, no matter how much of it is out there, which is true, it's not getting to the market. And because that oil is not getting to the market, the supply chain has been disrupted. So then the people need oil still. If there was plenty of oil, the price would be down here, $55. But because the transports are not getting to their source, to their sinks, because the source is the Middle East, the sink would be like everybody who's using oil, China, US, India, whoever is using oil. If it's not getting there, then the price is going to skyrocket. Okay, so while I was technically correct that the world is awash in oil, I completely ignored the fact that the transportation of oil could get disrupted badly. Okay, although I don't see that happening in the next 2-3 weeks, the market is pricing it in. Okay, so I didn't cover. I should have. The moment the war happens, I should have covered everything and realized a loss. Instead, I just covered one portion, this half. I'm still riding this half that I have here, which was another ego mistake. But 3 days later, I covered around here on the $80 a barrel level in U.S. oil, which was terrible. Okay, so that was using technicals while ignoring the fundamental picture. When the fundamental picture came to pass, I still had ego in the game, and I just got rid of half a position, thinking that it can roll over after. Maybe there's going to be some peace talks. You're like always trying to rationalize yourself out of it. Okay, the best thing to do is to just cover right away and then just wait, because eventually when this war ends, or if it does, oil is going to crash big time, because you're going to have that huge glut now hitting the market big time. Okay, so you're going to have a huge drop. I wouldn't be surprised if it drops 20% in one day if something good happens. Okay, but right now you're wrong, and you have to take your loss. Okay, so that's 2 mistakes in a row. I didn't trust my initial instincts here. I only used technicals to re-enter, ignoring changing fundamentals. And the third, and which could have saved me, was blinded by my position. I was short, and I only thought of going short. I didn't think of buying the breakout on real fundamental changes in the news. Okay, the correct move here was to buy the fundamentals, cover everything at the close of Monday, March 2nd, after Trump attacked Iran, knowing that this war will at least last 2 weeks, so we can have a protracted oil move. This move in oil, had I gone long, would have covered easily the losses from the shorts. Okay, so this is what you have to do as a trader. You're gonna make these mistakes. Okay, I could have taken a very small loss, here, and instead I took a big loss. It wasn't that big. It was about 1% of my portfolio, because it wasn't a big trade. It's not going to kill me. Okay, but the thing is, you can't think that way. Okay, a small position turned into a 1% loss where it should have been a 0.1% loss. So something that was like an afterthought trade turned into a trade that it was like a little thorn on my side. Okay, all because of ego and not seeing that things have changed, and I wanted to stay in and prove that I was right. Okay, so that is a terrible, terrible way to trade. Okay, and all of these mistakes were made. Didn't trust my initial instincts. Okay, even so, you can make mistakes. You can't get rid of your emotions. Even after 20 years of trading, you're gonna have emotions. The point is that you have to understand the emotions and be open-minded to being wrong, and you can't have your ego in it. It's a constant battle between greed and fear. Okay, but for traders, I like to say it's a constant battle between ego and what would you call the opposite of ego? I don't know, the the anti-ego, okay, or maybe humility. I guess ego would be on one end of the bargain, on one end of the scale, and the other end would be complete humility. Okay, so maybe a little bit of humility in front of the market gods would have been nice during this trade. It would have saved me a lot of money. And not only that, but it blinds you to potential profit opportunities. If I was humble and neutral and out of a position, I would be thinking to go long because the fundamentals did change temporarily, and I could have taken advantage of this huge breakout. Even though you don't expect oil to go up 40% in a week, you still, at the very least, should have gotten out on the first day of the war. Okay, and that's it. That's my mistake for oil. You learn the lesson. I actually didn't learn the lesson. I knew this lesson before. I just had to relearn it, I guess, and try to never ever do it again. Because had I had a big position, this could have really, really hurt. My ego could have really, really, destroyed a good chunk of my portfolio for no reason. Okay, so that's it, guys. I hope you learned a valuable lesson here. Don't do what I did. Okay, later.